Hey guys, welcome to the channel. It's Hamza, and in today's video, I'm going to talk about how I paid zero taxes on 7 figures that I made in 2020. You heard me correctly. I made 7 figures in 2020, and I'm going to have to pay zero taxes in them because I invested in real estate. Now, just to clarify, this is income that I made from real estate investing and not my businesses. Now, for those of you who don't know, I run multiple businesses, and for some of those businesses, I do have to pay taxes. But on my real estate investment portfolio, all the gains that I made this year were tax-free. And I was able to do this using 2 main strategies. And this is why I suggest people start investing in real estate early and take advantage of these tax strategies as they are still available to us. Before I continue with the video, please remember to smash that like button and hit the subscribe button if you guys are enjoying my content. And of course, it helps me out with the YouTube algorithm. Okay, with that plug out of the way, let's get back to today's video. Fun fact: 90% of millionaires were made through real estate. And in my opinion, becoming a millionaire in real estate is fairly easy. You have to be consistent with your investing, and you have to have tax saving strategies in place to get there quickly. Now, it's no secret that the wealthy have been using these tax strategies for generations and will continue to do so as long as these tax strategies are open to them. Another very important thing that you guys need to understand is that these are not loopholes. These are actually tax strategies that are built into the IRS code. So the IRS actually recognizes them and encourages you to use them as real estate investors. The first strategy that I used this year was called a 1031 exchange. Now, a 1031 exchange is basically you being able to take all the gains from an asset that you sold and put it into another piece of property. So let me give you guys an example. If I bought a property for $100,000 and then sold it for $200,000, if I took that entire $200,000 and reinvested it in real estate, I would not have to pay any taxes. How crazy is that? I could continue to keep deferring taxes as long as I keep reinvesting it in real estate. Now, I think the US government is actually very smart for doing this. And the reason for that is they're thinking about the long term. And they want people to continue investing in real estate for generations, which is why they offer us investors this incentive. And once again, the wealthy have been using this strategy for hundreds of years. Now, as I make this video towards the end of 2020, we now have a new president-elect. President-elect Joe Biden is planning on removing the 1031 incentive from real estate investors. And I think this may affect real estate investing in a negative way. In the past, I've had real estate investors pay me a larger premium on my property just because they wanted to use their 1031 exchange strategy. And paying me a little more for my real estate was a much better option for them than having to pay the taxes on it. And 1031 exchanges have actually become quite common as people have jumped into real estate investing over the past 5 years. I'm seeing way more deals on the market that are being bought up by 1031 buyers just because they want to defer their taxes for a later time. So we don't know what's going to happen with the 1031 exchange as of yet. There's a lot of talk about what the new administration is going to bring on board as far as removing the 1031, but I guess at this point, we're just going to have to wait and see. The second strategy, which is actually my favorite strategy, has to do with depreciation. And I was surprised when I found out that not many people know about it. This strategy is called a cost segregation study. Now, to explain what a cost segregation study is, I need to explain what depreciation is according to the tax code. Now, according to the IRS, when you buy a piece of investment property, you are allowed to depreciate it over 27.5 years. And what that means is every year you're allowed to write off just a little bit of that real estate as it decreases in value. Now, obviously, because the real estate depreciates over 27.5 years, it's not really a big deduction. At most, I've seen people be able to write off their rental income using this depreciation. But more recently, we had something called a cost segregation study be implemented in the real estate space. A cost segregation study is basically a report that says that not everything in your investment property depreciates at the same speed. So for example, you could depreciate foundation at 27.5 years. That's totally doable, but a light bulb, for example, only has a lifespan of a year or 2 at max. It also takes into consideration all the fixtures that you may have at the property. And what it does is it takes everything in your investment property and puts it in different buckets that depreciate at a much more accelerated pace than they would traditionally. I've actually used a cost segregation study twice in 2020, and I was able to depreciate one of my investment properties over 5 years, which gave me massive amounts of depreciation that I could use to offset any of the profits that I may have made on my other real estate deals. In fact, I was also able to depreciate another piece of real estate over just 1 year, making it completely worthless on paper, and I'm gonna use those losses against some of the other gains that I've made elsewhere. Now, since I'm considered a real estate professional, I can use those losses against gains that I have in my other businesses. And for that very reason, I love cost segregation studies. I do them on every piece of property I buy, and the losses that I accumulate can be used for 7 years. So in theory, I could continue to lose money over 7 years, and any gains that I make over that time, I could use the depreciation to offset those gains. Which, if done correctly, could mean that I don't have to pay taxes for a very long time, as long as I continue to invest in real estate. Now, in the past, a cost segregation study could only be done for larger commercial real estate. And to do a cost segregation study is going to cost you somewhere between $4,000 to $5,000. So a lot of single family and small real estate owners would shy away from doing a cost segregation study for their properties. But there's good news. With the help of technology, you can now do cost segregation studies on the smallest piece of property for as low as a couple $100s. All you need to do is Google cost segregation study in your area and find the company that'll do it for your single family home. And it's a completely remote process. They're gonna ask you a couple of questions. They may ask you for pictures of the real estate, and they'll give you the same tax benefits that larger real estate asset owners have been taking for years. You can now get a cost segregation study done for any piece of real estate at any price point very economically. So make sure you guys are taking advantage of this cost segregation study, as I truly believe that everybody who invests in real estate should not be paying taxes on their gains. Whether it's appreciation or cash flow, the more money you have in your pocket, the more you'll be able to invest in real estate and get to that millionaire status really quickly. That's it for me. I'm gonna see you guys next video.